Most people want to get rich fast. They search for shortcuts, quick trades, and sudden opportunities. But the truth is uncomfortable. Massive wealth is rarely built quickly. The slow strategy, consistent, disciplined investing over time is what separates those who become truly wealthy from those who constantly start over. It is not exciting, but it is powerful. The slow strategy begins with a simple idea. Time is your greatest asset. Every dollar you invest today has the potential to grow, not just once, but repeatedly. This process is called compounding. The longer your money stays invested, the more it works for you, quietly multiplying in the background without constant effort. Many people fail because they underestimate how powerful small, consistent actions are. Investing a modest amount regularly may seem insignificant at first, but over years and decades, these small contributions turn into something massive. The slow strategy rewards patience, not speed. Another key part of this approach is ignoring noise. Markets go up and down daily. News headlines create fear and excitement. But so investors understand that reacting to every change destroys progress. They stay focused on the long-term trend, not short-term fluctuations. Discipline is more important than intelligence. You do not need to predict the market perfectly. You need to stay consistent. Investing regularly, regardless of market conditions, ensures you are always participating in growth while avoiding emotional mistakes. The slow strategy also protects you from risk. When you invest over time, you reduce the impact of bad timing. Instead of putting everything in at once, you spread your investments. This approach smooths out volatility and creates more stable long-term results. Another advantage is psychological. Fast strategies often lead to stress, anxiety, and impulsive decisions. The slow strategy removes pressure. You are not chasing the next big opportunity, you are building something steadily, which leads to better decisions and long-term confidence. Wealthy investors understand that consistency beats intensity. It is not about how much you invest once, but how often you invest over time. Small, repeated actions create habits, and those habits eventually create wealth that seems impossible at the beginning. One of the biggest mistakes people make is stopping too early. They start investing with motivation, but after a few months or years, they lose focus. The slow strategy only works if you stay consistent long enough. Real wealth is built over decades, not weeks or months. Another key principle is reinvesting your returns. When your investments generate profits, those profits should not be spent immediately. Instead, they should be put back to work. This is how compounding accelerates and turns steady growth into exponential results over time. The slow strategy also requires clarity. You must understand why you are investing. Without a clear goal, it becomes easy to quit. Whether it is financial freedom, security, or long-term independence, your purpose keeps you committed when results feel slow. Patience is the foundation of this approach. Most people expect fast results and get discouraged when they don't see immediate gains. But slow investors understand that growth happens quietly. What feels like no progress today becomes massive success in the future. Another important factor is simplicity. Many people overcomplicate investing, constantly changing strategies. The slow strategy is simple. Invest regularly, stay diversified, and give your money time. Complexity often leads to mistakes, while simplicity builds consistency. Avoiding emotional decisions is critical. Fear during downturns and greed during rallies cause people to act irrationally. The slow strategy removes emotion by focusing on routine. When investing becomes automatic, decisions are based on logic, not feelings. Time in the market matters more than timing the market. Trying to predict the perfect moment to invest often leads to missed opportunities. The slow strategy ensures you are always invested, capturing growth instead of waiting on the sidelines. Another powerful aspect is building habits. Investing regularly becomes part of your routine, like saving or working. Over time, this habit becomes automatic, removing the need for constant decision-making and strengthening long-term discipline. The slow strategy also teaches resilience. Markets will fall, sometimes sharply. But instead of panicking, disciplined investors continue investing. These moments often provide the best opportunities for future growth, even though they feel uncomfortable at the time. Consistency during difficult periods is what creates real advantage. Most people stop investing when markets decline. Slow investors do the opposite, they stay committed. This allows them to benefit when markets recover and grow stronger. Another overlooked factor is cost control. High fees, frequent trading, and unnecessary expenses reduce returns over time. The slow strategy focuses on minimizing costs, allowing more money to stay invested and grow through compounding. Finally, the slow strategy builds confidence. As you see gradual progress, you begin to trust the process. This trust keeps you consistent, even when results are not immediate, and ultimately leads to long-term financial success. One of the most powerful elements of slow investing is predictability. While short-term markets are chaotic, long-term growth trends are much more stable. By staying invested, you align yourself with this long-term growth rather than fighting against uncertainty. Another key is focusing on what you can control. You cannot control market movements, but you can control your savings rate, your consistency, and your mindset. The slow strategy is built on controlling inputs, not obsessing over unpredictable outcomes. People often underestimate how important consistency is during boring periods. When nothing exciting is happening, it becomes easy to lose interest. But these quiet phases are where real wealth is built. As compounding continues to work silently, the slow strategy rewards those who ignore comparison. Seeing others make fast money can create doubt. But chasing quick success often leads to losses. Staying focused on your own path ensures you avoid unnecessary risks and remain consistent. Another important concept is delayed gratification. Choosing to invest instead of spending requires discipline. But every dollar invested today represents future freedom. The slow strategy is about trading short-term pleasure for long-term gain. Diversification plays a crucial role. Instead of relying on a single investment, spreading your money across different assets reduces risk. This ensures that even if one investment underperforms, others can continue driving your growth. The slow strategy also reduces regret. Fast decisions often lead to mistakes and second-guessing. By following a consistent plan, you eliminate impulsive actions and build a more stable and confident investing experience over time. Another advantage is that you learn as you go. Over time, you gain experience, understand markets better, and refine your approach. This gradual learning process is much more sustainable than trying to master everything instantly. Many people think they need a large amount of money to start. This is not true. The slow strategy works with any amount. What matters is consistency. Even small investments, made regularly, can grow into significant wealth over time. Automation can make this process even easier. Setting up automatic investments removes the need to make repeated decisions. This reduces the risk of skipping contributions and keeps your strategy running smoothly. The slow strategy also builds financial discipline beyond investing. As you become more consistent, you start managing money better in other areas of your life. This creates a positive cycle that strengthens your overall financial health. Over time, results begin to accelerate. What starts as slow progress eventually becomes noticeable growth. This is where many people finally understand the power of patience and consistency. As their investments begin to compound more rapidly. At this stage, many investors start to see meaningful results. Their portfolios are no longer small, and growth becomes more visible. This is where patience begins to pay off, and the effort of staying consistent finally shows real financial progress. The slow strategy teaches you to think long-term. Instead of asking what will happen next week, you focus on where you will be in 10 or 20 years. This shift in perspective removes unnecessary stress and improves decision-making. Another powerful benefit is freedom from constant monitoring. Fast investors check markets daily, reacting to every move. Slow investors understand that daily changes do not matter. This allows them to focus on life instead of constantly watching numbers. The strategy also protects you from burnout. Chasing quick gains requires constant attention and energy. Over time, this becomes exhausting. Slow investing, on the other hand, is sustainable. It fits into your life without overwhelming it. Wealth built slowly is often more stable. Quick gains can disappear just as fast. But wealth built through consistent investing is supported by time, discipline, and structure, making it far more reliable in the long run. Another key factor is confidence in your plan. When you follow a clear, consistent strategy, you reduce doubt. Even during market downturns, you trust the process instead of questioning every decision you make. The slow strategy also reduces mistakes. The fewer decisions you make, the fewer chances you have to make errors. By sticking to a simple plan, you avoid overtrading, emotional reactions, and unnecessary risks. Over time, your mindset shifts completely. You stop looking for shortcuts and start valuing consistency. This mental transformation is just as important as financial growth because it ensures long-term success. Many wealthy individuals follow this exact approach. They are not always chasing trends or making risky moves. Instead, they rely on proven principles, patience, discipline, and long-term thinking. Another overlooked advantage is peace of mind. Knowing you have a system in place reduces financial anxiety. You are not guessing, you are following a structured path that leads to growth over time. The slow strategy also aligns with real life. You earn, save, and invest gradually. This makes it realistic and sustainable for most people. Unlike high-risk strategies that are difficult to maintain. As your wealth grows, opportunities increase. You gain flexibility, security, and the ability to make better financial choices. This is the true reward of the slow strategy, not just money, but freedom. It is important to remember that consistency always wins in the end. Even if progress feels slow, staying committed ensures that you keep moving forward while others stop or restart repeatedly. Another key insight is that time rewards discipline disproportionately. Those who stay invested the longest often see the greatest results. The slow strategy gives you access to this powerful advantage. In the end, building massive wealth is not about doing something extraordinary. It is about doing simple things repeatedly over a long period of time. This is what makes the slow strategy so powerful. The truth is clear. The slow strategy is not exciting, but it works. While others chase speed and shortcuts, you build something real and lasting. And over time, that quiet consistency turns into massive wealth.